topic foreign operation. Yeah. Your book's chapter 18. Chapter 18 of the Green Book. Okay, can we start? So we have a lot of things to discuss. So foreign operation, I think the mind map at the beginning of the chapter is very important. So we just go through the mind map first. The mind map. Foreign operation. So this one is governed under FAR450. And the first thing that we want to look at is a few definition of foreign operation, functional currency, foreign currency, presentation currency, and so on. So just look at the definition first on page 752 of your books. Definition: FAR450, the effect of changes of foreign exchange rate, give the following definition. So if you go through the FRS, normally you will have certain sum in appendix A or in the FRS itself, the definition. So let us look at the first one, foreign operation. What is foreign operation? This is a subsidiary, associate or joint venture or branch of a reporting entity. Reporting entity here means the parent. The activities of which are based or conducted in a country or currency other than those of the reporting entity. So meaning that in easy to understand words, it says that this is your subsidiary or associate company which is situated outside Malaysia, in other country. And of course, since they are operating in other country, then they will be preparing the financial statement in that country's currency. For example, the book gives a subsidiary in Philippines where the currency is peso. So you will say that the parent, the reporting entity, will prepare the financial statement in ringgit, Malaysia. But the subsidiary being situated in Philippines will prepare the financial statement in peso. So foreign operation means if you have subsidiary, associate company, joint venture or branch of business which is situated outside Malaysia. Okay, so let us look at functional currency. This is the currency of the primary economic environment in which the entity operates. The entity means here the subsidiary or the associate company. Foreign currency, this is the currency other than the functional currency of the entity. Presentation currency, this is the currency in which the financial statements are presented. Okay, so it will say that for consolidated account, the presentation currency is always ringgit, because the presentation or the consolidation is done by the parent. So this is parent, and this is your subsidiary in Philippines. So parent will prepare the financial statement in ringgit, Malaysia. The subsidiary will prepare the financial statement in peso, Philippines. So this is called your the parent will consolidate the account. So this is considered your presentation currency. Presentation currency. And this is your subsidiary, so this is foreign currency. So we have presentation currency, we have foreign currency, and we have another one which is called functional currency. So this is the most important thing in FRS 121, functional currency. So functional currency, for your understanding, functional currency can be either ringgit or peso, depending on certain factors. And this functional currency will determine how you prepare your consolidated account if you have a foreign subsidiary. Okay, so the books give what's the definition of this functional currency. Functional currency, this is the currency of the primary economic environment in which the subsidiary operates. We don't understand this. What is this primary economic environment? Okay, so now we have three currency here. Foreign currency, presentation currency, and also functional currency. So we thought that we only have two currency. Ringgit Malaysia, the current local currency, and foreign currency. But now we have what they call it functional currency. Okay, so it says that, or it means that the location of the subsidiary is not important. The location is not important, but the primary economic environment is important in determining whether the functional currency, in our case here, is ringgit or peso. Okay, so let us go and look at the next page, the factors that determining the functional currency. Again, the functional currency is the currency of the primary economic environment in which the subsidiary or associate company operates. Okay, so FRS 121 gives some of the factors which can be considered or which you should consider in determining the functional currency. So this one is okay, sorry. Parent, solid ringgit Malaysia. Subsidiary will prepare in peso, the financial statement. But we want to know what is the functional currency of the subsidiary. Is it this one or could be ringgit Malaysia? Okay, let us look at the primary factors are, next page. A1, the currency that mainly influences its sales price and services. It is currency in which its sales price are denominated and settled. So you may have cases where your subsidiary is operating in Philippines, but majority of the sales is done to the parent. The subsidiary sell its product or services to the parent and quoted the sales in ringgit. So you can imagine that, isn't it? So if that is the case, the functional currency is ringgit, not peso. Not peso. However, if the subsidiary made a local sales, sell its product or services to local people or local companies in Philippines, then the functional currency is peso. Understand? So that's number one. It says that mainly the sales price of the services. And A2, the currency of the country whose competitive forces and regulation mainly determine the sales price of the goods and services. So if the currency of ringgit determine that one, the currency of Malaysia in ringgit, then ringgit is the functional currency. Or you can look at B, the currency that mainly influences the labor, material and other costs of providing the goods and services. So if your labor, material and other overhead costs is paid in ringgit, in terms of ringgit, then ringgit is the functional currency. Or otherwise, if peso, then peso will be the functional currency. Number two, other factors that mainly provide evidence of the entity functional currency are A, the currency in which funds for financing are generated, and B, the currency in which receipts from operation are retained. So we may have subsidiary in Philippines, but the financing come from Malaysia. The financing come from Malaysia and quoted in ringgit. So since that is the case, according to this number two, the functional currency is ringgit. If the funds financing come from Philippines itself in peso, then peso will be the functional currency. Understand? Okay, so that's why we say that the location is not important. Based on number one, it says that even though you have subsidiary in Philippines, but if this subsidiary is selling all its product, for example, to the parent and quoted in ringgit, so ringgit will be the functional currency. So you don't think that you have set up a subsidiary in Philippines, then all the sales is in to Philippines. You may have cases like this one: parent ringgit, subsidiary peso, and subsidiary produce product. All the product are sold to US. So if all the product are sold to US, then US dollar is the functional currency. You understand? You understand? So if all the sales, for example, are done with US, and then US is US dollar is the how the sale was quoted. You are selling to US company, of course you need to sell it using US dollar, isn't it? Quotation. Then it could be US dollar, the functional currency. Okay. Or if you are not still, you have still not decided on the functional currency, we can look at number 3, additional factors. Besides considering the primary and secondary factors above 1 and 2, we can look at these factors as well. 3A, the operation of the foreign operation are carried out as an extension of the parent, or the foreign operation operate with a significant level of autonomy. Okay, you have two cases here. One, it says that the subsidiary is considered as an extension of the parent, meaning that the parent will control a lot of the subsidiary, determine, do the decision making for the subsidiary and so on. So if that is the case, then ringgit Malaysia is the functional currency. However, if the subsidiary is given a significant level of autonomy, given mandate to decide on their own, if the subsidiary decide on their own, the decision making all done by the subsidiary, there's a lot of autonomy, power given to the subsidiary, then in our case here, peso will be the functional currency. So how you consider that one? Either that is your extension of your business, or this one is totally independent of you, of the parent. I mean, even though they are your subsidiary. Okay. B, 3B, there are high or few transactions between foreign operation and parent. So if there are high transaction between parent and subsidiary, then ringgit Malaysia is the functional currency. However, if there are only few transactions between foreign and parent, then the functional currency is peso. So high transaction means all the sales are made, meaning that high transaction between subsidiary and parent means that the subsidiary are selling to the parent. Again, you go back to number 1. It says that the functional currency could be ringgit Malaysia, isn't it? But if there are only a few, meaning that the subsidiary, majority of the subsidiary sales are done to local, and only a few sent to the parent, isn't it? So since there are few, then peso will be the functional currency. And see whether the cash flow from the foreign operation activities directly affect the cash flow of the parent, and whether the funds are readily available for remittance to the parent. If the cash flow of the foreign operative affect the cash flow of the parent, then ringgit is the functional currency. If not, then peso. And the last one, the operation of the foreign operation are financed mainly from its own operation or borrowing rather than the parent. So if the financing for the operation of the subsidiary comes from the subsidiary itself, meaning that internally generated profit, for example, then peso is the functional currency. But if the operation of the subsidiary depends heavily on the parent for financing, then ringgit Malaysia is the functional currency. Okay, so we are talking about this functional currency. Why? Why the functional currency is so important? If you go back to the mind map, okay, once you determine the functional currency, then you can classify the foreign operation into two sets of operation. One on the left. On your left of your mind map, it says that functional currency of a parent, the own currency equals foreign currency. Can you see that one? Yeah, own currency equals the foreign currency. Extension of the parent. Can you see that one on your left? And so you can see how you translate the financial statement. For non-monetary item, you will use actual. Actual is actual exchange rate. Actual exchange rate, meaning that on the day of the transaction, actual. Closing also means closing exchange rate, closing year exchange rate. Revenue and expenditure, actual, meaning actual exchange rate or average exchange rate for the year. And your goodwill is calculated based on historical rate. Historical rate means the day you acquire the subsidiary, historical rate. And exchange difference will go to your statement of P&L, comprehensive income. What is exchange difference? I will explain to you once I show you the example. So you can see that there are three items there. How you translate the financial statement, how you treat your goodwill, how you treat your exchange difference. One set. One set of transaction. However, that is if your functional currency is ringgit. On your left is where your functional currency is ringgit. If you determine that functional currency is ringgit, then that's how you do it. How you translate the financial statement, how you calculate goodwill, and also how you treat your exchange difference. However, if your functional currency is peso, in our case here, for example, then you look at on the right hand side of your mind map. For example, once you translate the financial statement, for items in statement of financial position, you will use the closing date rate, meaning that 31st December, for example. Everything will go to 31st December. Your SOCI, your statement of financial position, actual or average for all items. So this is how you translate your financial statement. Goodwill, your goodwill will be recalculated using the closing date rate, your goodwill. And what happened to your exchange difference? It will be considered as your OCI, other comprehensive income, not P&L. So you can see the difference, three items there. So what are the three items that we have? Based on the functional currency, it will determine these three items differently. How you translate the financial statement, what happened to your goodwill, and what happened to your exchange difference. If you want to transfer your financial statement, if the functional currency is ringgit Malaysia, and peso, differently, isn't it? So if you transfer your financial statement, if your functional currency is ringgit Malaysia, you will use many exchange rate, either actual, closing, or average. And for goodwill, you use historical rate. And for exchange difference, this will be your item in your statement of P&L. But for peso, how you translate your financial statement? For balance sheet or statement of financial position, you will use the closing rate. And for your statement of P&L, you will use the actual or average rate. Goodwill, at the end of the year, you will calculate your goodwill using the closing rate exchange. And exchange difference, this one you will consider it as your SOCI item, OCI item. So you can see the difference, right? The difference in how you prepare your financial statement. So this difference comes from the functional currency determination. So once you look at the factors and you determine the functional currency, if the functional currency is of the parent, that's how you do it. And if the functional currency is otherwise, peso for example, then you will prepare otherwise. So You may look at these differences by looking at the example in the books. So I want to discuss, so before I proceed, any question so far? Foreign operation? No. Okay. Let's look at example 4, the books. Or before we look at example 4, can you look at page 756 and 758? These are the exchange rate to be used. On page 756, this is the these are the exchange rate used if your functional currency is ringgit. 756 ringgit, and 758 similar item. This one is functional currency is not ringgit, peso for example in our case. So if you look at, you compare between the two. Property, plant, equipment. So property, plant, equipment, if your functional currency is ringgit, then the exchange rate to be used is on the date of purchase of the item. If you purchase on 1st January 2015, then that's rate. What is the exchange rate between ringgit and peso on that date? Which we use. However, if on page 758, if your functional currency is peso, your property, plant, equipment, the exchange rate to be used is the closing date rate, 31st December, regardless on when you purchase the asset. So you can see the difference now. That's one item. Another one could be your cost of inventory, for example. Page 756, cost of inventory. The date when the cost was incurred, meaning the date when you purchase the inventory. If you are using, if you determine that functional currency is ringgit. But if you look at page 758, cost of inventory, closing rate. In fact, we have discussed just now, all your items is closing rate, isn't it? For all your items in the balance sheet, in the statement of financial position, you will use closing rate. So you can see that, the difference. So meaning that if we focus on the difference lies on which exchange rate to be used to convert from peso to ringgit Malaysia. Because as you know, the exchange rate keep on changing, right, from day to day. Ringgit and peso, or ringgit and even with Singapore dollar, isn't it? It's keep on changing. Ringgit and US dollar keep on changing from day to day. So what exchange rate to be used? Then FRS 1-to-1 determine. So based on these few example on page 756 and 758, you can see the difference. Okay. So now let us look at example 4. So example 4, this one is translating from foreign to functional currency, or this is where the case where your functional currency is ringgit. Example 4, your functional currency is ringgit, and later on we will look into example 5 where the functional currency is not ringgit. The other could be peso in our case here. Okay. So example 4. On 1st January Act 7, H acquires 75% shares of S, which is situated in zigzag, where the currency is Z. The reserve of the subsidiary on the acquisition date were Z1 million. The statement of comprehensive income for the year ended 31st December and the statement of financial position of the both company are as follows. You are given the statement of comprehensive income for the year ended 31st December Act 7 for H quoted in ringgit, all quoted in ringgit, and for the subsidiary quoted in Z, because the subsidiary is situated in this country. For example, in our case here, could be in Philippines, it could be peso, isn't it? But in this case is, I don't know which zigzag, this is only illustration. So hopefully that we don't have this country, zigzag country, where there's a lot of Z over there. So you look at the sales, sales of the parent is quoted in ringgit, 5.5 million. Sales of the subsidiary, 2 million Z. Opening inventory, purchases, closing inventory, your net profit also are given there. So the net profit of the holding company is 1.5 million, and for the subsidiary is 400,000 Z. Okay. So statement of financial position also are given there as at 31st December. Holding company, all are quoted in Ringgit Malaysia, but for the subsidiary are in Z. So of course you cannot consolidate because one is quoted in Ringgit, one is quoted in Z. So what you need to do is you need to translate, you need to convert from Z to Ringgit. So once you are quoted or you change as financial statement from Z to Ringgit, then only you can consolidate Ringgit to Ringgit, isn't it? You need to consolidate. Okay, so now what is the process? How the process to consolidate this item? Then if you want to convert from Z to Ringgit, you need to have the exchange rate. You need to have the exchange rate. And FRS 121 has given you what is the exchange rate to be used if the functional currency is Ringgit. What is the rate to be used if the functional currency is not Ringgit? And okay, so that's like the difference between the two. That's why we discuss this functional currency. Okay, so now next page, the exchange rate are given there. 1st January X7 Z3 RM1. So meaning that for every $1, for every 1 ringgit, you can get 3Z. 3Z. Or 1Z equals to 1 over 3 ringgit lah. Isn't it? 0.33. Average for the year 2.5. Year end closing date is 2 to 1. Closing date inventory was purchased. So when you purchase your closing inventory, the exchange rate was 2.25. Opening date inventory was purchased 3 to 1. So when you purchase the inventory, then the exchange rate was 3 to 1. 1st January X4, date of which property, plant and equipment of the subsidiary acquired. When the subsidiary acquired the asset earlier, the exchange rate was, please amend that, does not 4 to 1, 3 to 1. 3 to 1. Okay. So at the beginning of the year, the exchange rate is about 3 to 1. But at the end of the year, it's going about 2 to 1. So in this case, do you think the ringgit is weaker or stronger compared to Z? Is the ringgit stronger or weaker compared to Z? Based on this example. Stronger or weaker? Some say stronger. Some says weaker. There's only two answers. At the beginning of the year, 3 to 1. At the end of the year, 2 to 1. Weaker or stronger? Very difficult. Okay, now I say that. At the beginning of the year, you can get $3, 3Z for every $1. At the end of the year, you get only 2. So, weaker or stronger? It's weaker. It's weaker. This example. Of course, you don't have this zigzag country, isn't it? But it's weaker. In our case here, it's weaker because at the beginning of the year, you can get 3Z for every $1. But at the end of the year, you can only get 2. So meaning that in this case, maybe zigzag country becoming more popular. Many people want zigzag countries currency. Then of course they will get stronger compared to RM. Ringgit Malaysia. Okay. Required, prepare a consolidated statement of comprehensive income and consolidated statement of financial position, assuming that the subsidiary's functional currency is ringgit, as I mentioned just now. Okay, so we want to look at these 3 cases. We want to look at these 3. 1, 2, 3. So as usual, when you acquire your subsidiary, you need to calculate goodwill. Calculate goodwill. So now the functional currency is ringgit Malaysia. So if your functional currency is ringgit Malaysia, when you calculate your goodwill, what is the exchange rate you use? Historical, isn't it? This one, historical. Historical in our case here is on 1st January X7. So this is the exchange rate that you use when you calculate goodwill. Okay, now, how you calculate your goodwill? I hope you don't forget, right? Isn't it? How calculate your goodwill? The answer is given in the book, but I think I want to rephrase it so that you understand better. We calculate goodwill, consideration transferred, plus NCI, and then minus fair value of net asset of the subsidiary on 1st January X7. Okay. Yeah? So, let us look at it. What's your consideration transferred here? Consideration transferred, cost of acquisition is 1.2 million. This one you look at your statement of financial position. Statement of financial position of H. One of the item there is investment in S, 1002. Can you see that one? Yes. So meaning that the consideration transferred is 1,000 or 1.2 million. So consideration transferred is RM 1002. Okay. So your NCI using proportionate, what's the percentage of your NCI? If you control 75, your NCI is 25% because you purchase 75%. So 25% times the fair value, right? So now what is the fair value? Fair value of the subsidiary, OSC, and then reserve. OSC of the subsidiary. Look at the subsidiary. Ordinary share 2 million Z. Z, So this one Z. Z 2 million. Reserve. Beginning of the question. At the beginning of the question, the reserve on 1st January X7 were Z 1 million. Z 1 million. So you get 3,000. 3,000. So 25% times 3,000. 750. Okay. So now 750. This is NCI in Z. This one also in Z. This one in ringgit. So you cannot just simply add and minus this figure, isn't it? Because this one is Z. This one is Z. This one is ringgit, Malaysia. So what you need to do is you need to convert this into ringgit. Convert this amount into ringgit. So what is the rate to be used? Historical. On the day you acquire. So what is the exchange rate on 1st January X7? 3. 3. So $1 equals to 3Z, or 3Z equals to $1. So if you want to convert 750,000 Z into ringgit, what do you need to do? You times or you divide? Or you can times 1/3, or you can divide 3 lah. Divide by 3, isn't it? This one you times 1/3, so that this one can be converted into ringgit. Okay, or we divide by 3 lah in this case. So 250. So you get 1450, and this one also you times 1/3, you get 1 million. So this one minus this one, ringgit, so you get 450,000 ringgit goodwill. So that's your book. Your book has simplified this one. Simplified this one, then you get 450. But it looks weird, isn't it? How you calculate goodwill like this one? New methods? No, that's not new methods. And that one is simplification. Okay, so this is your goodwill on consolidation. Any question for this one? Okay, no question. Okay, so this is your goodwill. When you prepare your financial statement, your goodwill on consolidation will be 450,000. I think maybe now you can look at the statement of financial position. Can you look at now? Look at the statement of financial position of the consolidated one, page 763. Consolidated statement of financial position, goodwill on consolidation 450. Okay, So now, since we are discussing this, let us go how we calculate goodwill if the functional currency is not ringgit. So this one is ringgit. If the functional currency is peso or zigzag in our case here, sorry. This one is zigzag, Z. If the functional currency is Z, so what is the exchange rate they use for goodwill? If the functional currency is not ringgit. Is it? Closing. Yes, closing. The closing rate. Closing rate meaning here 31st December. 31st December X7. So meaning that one is not correct. This one is not the goodwill of the subsidiary on consolidation if the functional currency is not ringgit. In our case here, if the functional currency is Z, so how you calculate your goodwill? Similar. You will calculate your goodwill on the acquisition this much, 450. But at the end of the year, you need to calculate your goodwill. Original is 450,000. This one you get from here. And then you times 3. In order, because this one all divided by 3, isn't it? Divided by 3, you times 3 in order to get your goodwill in Z. So this one is RM, this one is Z 700. 450 times 3, what is it? 1350Z. Okay, you understand? And this one is your original that you have calculated. This one okay. And this goodwill in ringgit, you times 3. This one you divided by 3. Now you times 3 again, so that you can get Z. This is your goodwill in Z on the acquisition. On the acquisition is Z1350. And this one, once you get this one, you divide with the closing rate, exchange rate. What is your exchange rate on closing date? 2. So this one you times 2. You times 2, what do you get? RM 6. What? 675. Okay, 675. So this is your goodwill on consolidation to be reported if your financial statement, the functional currency is Z. If the financial statement, if the functional currency is Z, your goodwill on consolidation is 675,000. So different goodwill. Different goodwill amount. Same case, exactly the same thing. This is your goodwill. This one is goodwill if the functional currency is RM. This is your goodwill if the functional currency is Z. Understand? So this is what they mean by closing rate. Closing rate. You calculate your goodwill. Once you get your goodwill in ringgit, and then you times 3. 3 is the historical. You times 3 so that you can get Z. What is the goodwill in Z? Okay, and then once you get in Z, then you apply with the exchange rate on the closing rate, which is 2 to 1. So ringgit Z, if you want to convert to ringgit, then you times 1/2 lah. 1/2. Then you will get the goodwill in ringgit. you look at your example 5. Look at the financial statement. The statement of financial position, example 5, the consolidated one. Goodwill on consolidation is 675. Okay, look at that one. Now page, what is it? Example 5. Where is it? The next page only. 767. Consolidated statement of financial position, goodwill on consolidation, 675. 675. Okay, so you understand? So I am showing to you now how you treat goodwill. If your functional currency is RM, this is how you calculate it. If your functional currency is Z, then you need to add this calculation to get your goodwill using the closing rate. Okay, so this doesn't mean that the goodwill has increased. No, this one is different case. This one functional currency ringgit. This one functional currency Z. Your functional currency is always will says that fixed, isn't it? If your functional currency is ringgit this year, next year also ringgit. But if your functional currency is Z from start, then you say that Z next year also means Z. So meaning that these are two different cases. I'm not comparing the goodwill. I would say not comparing year by year or at the beginning of the year this one, at the end of the year. No, this one is your goodwill if your functional currency is ringgit. This one is your goodwill calculated if your functional currency is Z. So if your functional currency is ringgit, then you will prepare your financial statement based on example 4. If your financial statement is Z, then you will prepare your financial statement according to example 5. So since we are discussing goodwill, I want to show to you what is the difference between these two. So now you can see the different way you calculate your goodwill. The different way that you calculate your goodwill under both cases. Any question on goodwill? Goodwill on consolidation. So you will get different goodwill. You will get different goodwill, and they are huge, isn't it? This one 450. This one is 675. But it's actually like the same things. You purchase at 1.2 million. This is the fair value of net asset of the subsidiary on the acquisition. But you can see the difference. This huge difference. 450. 450,000. This one 675,000. Different in your goodwill. Okay. Any question so far on goodwill calculation? I hope that I have demonstrated to you the difference. So again, now why you have this difference? Because of functional currency. You determine the functional currency. If the functional currency is ringgit, this is how you calculate your goodwill, 450. If the functional currency is Z, then this is your goodwill on consolidation. Okay, so that's why we discussed at the earlier part of this lecture, of this session, the functional currency. You need to determine the functional currency. Okay, I've just demonstrated to you the way you calculate goodwill under both cases. So, of course, in your examination, the exchange rate will be given to you, and the case also will be given to you. Either the functional currency, what is the functional currency, also will be given to you. Inshallah. Either functional currency is ringgit or Z. Then, if ringgit, then you calculate up to this one. If Z, then you continue the calculation up to this one. Goodwill on consolidation. Okay, now number 2, translate the financial statement. How you translate the financial statement? On that page 761, when you look at the calculation there, once you have calculated the goodwill, the exchange rate to be used. So for sales, actual or average, opening inventory, previous year closing date, purchase, actual or average. Closing inventory, actual or current year closing rate. Depreciation follows the relevant asset. So it means that if the relevant asset was purchased, in our case here, the relevant asset was purchased in X4, 1st January X4, where the exchange rate was 3:1. So the depreciation also will follow that 3:1. So depreciation follows the property. So if the property was purchased in X5, then you follow X5 exchange rate. Expenses, actual or average. Taxation, average. Interim dividend, actual. Share capital and pre-acquisition reserve, the exchange rate to be used on the date of acquisition, which is 1st January X7. So based on this exchange rate to be used, then you look at your next page, your statement of financial position of S in Z converted into ringgit using the rate based on the one that we discussed. Let us look at the PPE, property, plant, equipment. So property, plant, equipment, the rate that you are using is 3. 3 means 1st January X4. 1st January X4. The date on which the property was purchased. Inventory. So you know that inventory in your financial statement, statement of financial position is closing inventory. So closing inventory, when you purchase your closing inventory, the exchange rate was 2.25. Trade receivable, bank, non-current loan, trade payable, these are all using the average. 2 is, sorry, not average, the closing rate. Closing rate. However, ordinary share and retained profit brought forward, that is on acquisition date, 1st January X7, which was 3. So now you can see the words balancing the rate, retained profit for the year. Okay. So this one is to balance the statement of financial position. So if you look at the statement of financial position, up there, all your asset minus the liability, the total in ringgit is 1194. Can you see that 1194? So when you do that one, this is your statement of financial position. Asset, of course, liability, equity. So your asset and liability total is 1194 ringgit. So of course, your equity also should equals RM 1194. Then only your statement of financial position balance. Okay. So this equity, you have 3 components there. Share capital 667, retained profit brought forward 333. So when you total this, you will get 1000. So 1000. So retained profit for the year. So retained profit for the year should be 194, isn't it? So this one, when you add these two, you will get this 1194. Okay. So if you look at this, retained profit for the year should be 194. But if you look at in Z, financial statement, the retained profit for the year was 400. You go back to the equation. You go back to the equation and you look at the statement of comprehensive income for Z, that's also for S, the net profit was 400,000 Z. Correct, isn't it? 400,000 Z for the subsidiary. So this 400,000 Z, if you convert using any of the exchange rate, for example, if you take closing date lah, for example, if you take closing date, which is 31st December, Z2 to 1, then you will divide by 2. 400 times 1 over 2, you will get 200. So if the retained profit for the year is 200, then accounts will not be balanced. For example, if this one is 200, then you become 1200. So 1200 here, 1194 here, not balanced. So this item is used to balance the account. So regardless of what is the profit of the subsidiary in Z, when you convert to ringgit, it must be 194. It must be 194. Then only your accounts will balance. So that's why we don't use any rate. 400,000 Z, you just use balancing to balance the account. In fact, that one, if you convert, there should be about 2.06 actually, in order to get 194. So you don't use any rate. You just want to balance. So this retained profit for the year is used to balance the account. So you will get 194 here and 194 for equity. Okay. So based on your statement of financial position, your profit for the year is 194,000 ringgit. Yeah? Okay. Understand that one? Convert. Now you look at step 3, statement of comprehensive income. So this one is statement of financial position. So when you prepare your statement of income, statement of profit and loss. When you prepare a statement of profit and loss, you use the exchange rate given. What was that? For sales, average. So we have many sales transactions for the year. So if you want to convert one by one sales, then I think it will be very time consuming, isn't it? So if you are selling once a day, then you have 365 transactions. Each and every you want to convert. The best one is convert based on the transaction day. That's the best one. That one is the best one. So if you have 365 transactions, 365. I think with the computer, no problem, isn't it? But if you are selling to 10 customers a day, then that one become 3,650. I think still can use, but it's very time consuming. So what we do is total the sales in Z, then use the average. Average rate. So this one sales in Z is 2 million. The average rate, what's the average rate for the year is 2.5. Average for the year is 2.5. So 2 million divided by 2.5, you get 800,000 ringgit. Okay. Opening inventory. So opening inventory, you use the opening date, the 1st January. 1st January X7, 3. So you divide by 3, you get 33. Purchases, you use average 2.5. Closing inventory, you use the closing inventory date of purchase 2.25. So you get you look at your depreciation. The depreciation is divided by 3. 3 is actually on 1st January X4. On the day the PPE was purchased. The PPE was purchased using 3 to 1. So this one is also 3. So now you get your net profit. Net profit based on statement of comprehensive income is 191. So this one, your net profit for the year 191 ringgit. This is 191. This is 194. You understand? This one is 194. Retained profit for the year based on statement of financial position 194. Retained profit for the year based on statement of P&L 191 ringgit. This one is ringgit. This one is ringgit. So which one is correct now? What's your opinion? You have two, 194,000 ringgit and 191,000 ringgit, both in ringgit already now, but still there's a difference there. So which one is correct? What's your opinion? 191. Why? Some say 194. There's only two answers. But which one do you think? I prepare statement of financial position, my profit is 194. I prepare my statement of P&L, my profit is 191. So how do you think? Some say 191. Why 191? Some say 194. Why 194? Decided it. Okay. So 194 is superior. 194. So in our case here, so when you compare these two, so we will say that this is the profit for the company. 194. Because if you replace this one with 191, the account will not balance. So still you need 194 here, isn't it? If you replace this one with 191, you say that profit of the company is 191, then the account is not balanced, isn't it? So now you have 194 and 191. So the difference between these two, 3 million net, so 3,000. So this is what they call exchange difference. Exchange difference, this one. Exchange difference. So what is exchange difference? The difference in retained profit for the year, in balance sheet and in your income statement. The difference. So in our case here, the difference is positive 3. 194 minus 191, 3 positive. Not minus 3. So this one minus that one. So you get 3. So now we have two treatment here under financial currency ringgit and financial functional currency Z. What we do with this exchange difference? Okay. This one, and if your functional currency is ringgit Malaysia, different exchange will be considered as your statement of profit and loss item. Under Z, it will be your OCI, other comprehensive income. So you look at, now you look at this example 4, next page, you can see that the consolidated statement of comprehensive income, the lower box on page 763, the lower box. Can you find there after net profit? Different on exchange or exchange difference. Exchange difference 3. So your net profit considered as 1694 after considering that exchange on different or different exchange difference. Difference. Okay, exchange difference will be 3. Okay. So once you have converted, I think step number 1, converted from Z to RM for items in your statement of financial position, and step number 3, converted the statement of comprehensive income from Z to RM. So once you have converted into RM, then you can consolidate as usual as we have consolidated earlier. When you prepare consolidated account, parent plus subsidiary minus intercompany transaction. So once the subsidiary's financial statement has been converted in ringgit, parent in ringgit, subsidiary in ringgit, then you just can add the two. For example, if you look at sales or revenue in our case here, consolidated statement of comprehensive income, the consolidated account, the revenue or sales was 6.3 million. So 6.3 million, parent, how much parent? Parent is 5.5 million. You look at the equation. In the equation, the revenue or sale of the parent is 5.5 million. Subsidiary 2 million Z, but that 2 million Z has been converted into ringgit and becomes now 800. So 5,005 plus 800, then you get 6,003. Other items also follow the same method. Opening inventory. Opening inventory is 533. Opening inventory of the parent 500. Opening inventory of the subsidiary, when you convert to ringgit, becomes 33. So 533. So everything follow the same except for this different exchange. Exchange difference. So this exchange difference will be, in our case here, will be added to the net profit. So you'll get your total profit is 1694, and profit attributable is 1694. Attributable to parent 1645. NCI. So NCI, the profit after tax of the subsidiary is considered as 194. This one, 194. Profit attributable. Put it here. So if you have your net, your net profit was originally 1691. Your net profit 1691. Exchange difference is 3, so 1694. Attributable to parent and NCI. This one you have working normally, isn't it? Working one. So total here should be 1694. So So this working. So how do you calculate this working? Working 1 for NCI. So where to put it? Don't know where to put it already. Here. Working 1 NCI, profit after tax of the subsidiary, isn't it? Profit after tax of the subsidiary. So now you have two profit. One profit 194, one is 191. So which one you use? This one. I said use this one, 194. So 194. And of course, if you have adjustment, you need to do adjustment. But for our case here, we assume that there is no adjustment. So no adjustment. So it will be 194 times NCI, 25%. So you get 49, isn't it? So this one is your 49. 49. 49, isn't it? 49. So since this one is 49, this one minus this one, that goes to the parent, the balance. Isn't it? Okay. So I want to demonstrate when you calculate this one, what is the profit after tax of the subsidiary? So this one should follow this one, not this one. 194. Okay. Any question on your this one? Exchange difference is taken as your profit. You will add to your profit. Once we discuss example 5, I'll show to you that if your functional currency is Z, then this item, the exchange difference, will be taken as your OCI items. Okay, now let us look at example 5. Example 5, all the facts are similar as example 4, except that the functional currency of the subsidiary is Z, not ringgit. Okay, now I have demonstrated earlier how you calculate your goodwill. And this one I've shown to you already. Okay, now I want to show how you prepare, how you translate the financial statement. Okay, the financial statement, again, you need to convert from Z to ringgit to the subsidiary. But you are using different exchange rate. Now, step number 1, for example, statement of financial position of S, all the rate used are 2, which is closing rate. Closing day. Closing day rate, isn't it? 2. Look at the equation. 2 is your 31st December. 31st December. All items in your property, plant, equipment, inventory, all your asset, all your liability, you use 2. The only difference is, the only exception is your ordinary share and retained profit brought forward. You will use your acquisition date, historical. So once you use that one, again, you need to balance the financial statement. You need to balance the balance sheet. So in order to balance, because your asset minus liability is 1,007. 1,007. So your equity should be 1,007 as well, isn't it? So we have calculated earlier, shares and retained profit 1,000. So 400,000 Z now equals to 700,000 ringgit. I think just now I have just this one. Just now you can see that in order to balance in earlier case, your retained profit for the year should be 194. So that you get 194 equals the asset 194. But now it's 1,007. So 1,007. So this one should be 700 in order to get 1,000. So this one 1,000, isn't it? So you need to have this one 700. So now 400,000 G equals to 700,000 ringgit in order to balance the statement of financial position. So your profit is 700,000. The subsidiary profit for the year is 700,000 ringgit. Okay, and this one you need to compare with the profit when you convert the P&L. Next page, your P&L, statement of comprehensive income. So all item in your statement of comprehensive income, you use average for the year. So once you use average for the year, your net profit is 160,000 ringgit. 160,000 ringgit in P&L, 700,000 ringgit in balance sheet. The difference is your exchange difference. Okay, what is your exchange difference? 700 minus 160, 540,000. 540,000 exchange difference. So where this 560 or 540,000 goes? Yes, it goes to your OCI. This one, exchange difference will go to your OCI. Now when you look at the consolidated statement of P&L, look at next page. Next page. Look at page 768, the consolidated statement of comprehensive income. So you have the other comprehensive income, isn't it? After net profit. Net profit 1660, exchange difference 540. So 540 different on the exchange is considered as part of your OCI. OCI. So you have two now. You have net profit and you have TCI, total comprehensive income. And once you have two, then the attributable also two. Net profit attributable, TCI attributable. So you can look at the answer. If you look at the answer given there, the profit is 1660, the TCI is 2425. So net profit attributable to the parent and NCI. You look at NCI there. NCI 160. What is 160? This is profit based on P&L. This is your profit based on the P&L. Profit calculated in your when you convert from Z to ringgit in the statement of comprehensive income, page 766. Now look at page 766. What is the profit, net profit in ringgit based on page 766? That is 160, isn't it? So that is the profit 160. When you calculate net profit attributable to the NCI, use the profit in your statement of comprehensive income. But when you calculate TCI attributable for the NCI, you use 700, which is profit based on balance sheet. Profit based on balance sheet, 700. So meaning that you are using different profit. For net profit attributable, use the income statement profit. But when it comes to TCI attributable, then you use the balance sheet profit, 700. Okay, so once you have completed this, so I have shown to you this one, right? And also this one, what's the rate to be used here, and what is the rate to be used here, right? I have shown to you, you will get different answer. So you'll get different answer for your consolidated account. Your consolidated account will look totally different. If your consolidated account is here, you don't have OCI. This one you have OCI, isn't it? This one you have OCI because this exchange difference is considered as your OCI. So that's why you have net profit and total comprehensive income. But for this one, you don't have OCI because these items are considered as part of your P&L. This one will be added to your profit. There will be no OCI in this case. And I think if you convert financial statement, for this case is easier because all your asset and liability, you will use closing date. And your income statement, all average, isn't it? But for this one, I think you need to look at there are a few exchange rate to be used. And this exchange rate, either this one and this one, you need to memorize. The exchange rate will be given, but which one to use? Is it opening day? Is it average? Is it closing date? Is it on the day the asset is purchased? Okay, so you need to memorize those. Which one? Which exchange rate need to be used? The exchange rate itself is given. The exchange rate is given, but which one need to be used? And before that, you need to classify. Is it that one, this one? Of course, the question will tell you. If the examiner is kind, then it tell you, oh, this one is ringgit, assume this one. But in some cases, you need to determine based on the factors that we have discussed earlier. Factors that we discussed, number one, it says that where the sales go, isn't it? Is it the financing come from parent or financing come from subsidiary itself? Is it an extension of the business of the parent, or is it this one is usually independent? So that are all the indicators that you need to decide. You use it to determine the functional currency. Once the functional currency has been determined, then you know which exchange rate need to be used, whether you have OCI or not. Okay.